Hello everyone, what is going on? Donald Trump just made a massive trade agreement with EU. How will that impact the market? Let's all break it down today. Welcome to the channel of Trigonometry. I am Mr. X. Today is July 28th. So Donald Trump yesterday made a massive trade agreement with EU, the European Union. The details of the deal has not been finalized, but we do have a rough framework over here. European Union will be paying 15% tariff on all goods exported to the US, while the US paying zero on tariff for all goods going from US to the European Union. And on top of that, European Union will be investing $600 billion of worth of investment into the US and also will be purchasing $750 billion of US energy. That is massive. And I think a lot of people are really shocked by this deal. Not only the fact that EU is paying the 15% tariff to the US, but the US is paying literally zero on tariff for anything going into the EU. And EU's of promising hundreds of billions of investment and purchase from the US. What is going on? Why does EU basically giving up everything and getting nothing in return? As later on, some of the EU officials clarify that the 600 billion investment and the 750 billion purchase of US energy is not finalized or it's not even guaranteed. It's just a intention or willingness, but the actual amount of the investment or purchase will depend on the actual company that come to this agreement. So what they really finalized was basically the 15% tariff on EU goods and 0% tariff on US goods. That's also a great deal, a massive deal, a massive win for the United States of America. Um, I think there are a few different ways all the other countries making deals with United States is that they will, over a period of time, devaluate their currency and along with some kind of government subsidies to basically erase the tariff impact for the economy. And I am expecting the US dollar will relatively go stronger. And all the other currencies like the euro, the Japanese yen, and the Chinese yuan, the Canadian dollars, and all the other major currencies will devaluate over the next a few months. And very interestingly, you look in S&P 500 today, it had a big gap up last night after the deal was announced and went all the way to 640. The SPY went all the way to 640. Now it retraced all the way back to 636, which is red right now. So why is the SPY red? I think mainly because a lot of these trade deals were priced in already, even before this deal came out, just because we have a massive run up for the past 3 months and we just need to take a break at some point. I think another very important piece of fact that could be overlooked by the market is that since the new tariff rate is higher than the current tariff rate at 10%, while we were having this negotiation, Trump basically put a 10% tariff on from all the countries. So, but that 10% tariff are going to go up at least to 15% for most countries, and some other countries could go up to 25, 30% in case of China. It's still ongoing, but most likely that tariff rate will be much higher than the current tariff rate. So based on that fact alone, I don't think Fed can just say, okay, let's lower the rate because we have a future expectation of price possibly going up even more due to the higher tariff coming up in the future. Also, we have an ongoing trade negotiation with China at the same time. When those tariffs start to kick in, I think there are still a lot of concerns if those delayed tariff rate hike have an inflationary pressure on the price of core goods in the United States. I don't think Fed can just say, okay, let's lower the rate in the next meeting. If anything, the Fed could even lower the rate cut expectation by the end of the year. Right now, I believe we have around two cuts, a total of 50 basis point by the end of 2025. I think that number could go lower to one rate cut of 25 basis point. Even more pessimistic, it could it could be zero rate cut. Some of the Fed officials have already suggested earlier, some of them were expecting zero rate cut by the end of 2025. If that is the case, I think we have a lot of mispricing in the market. Basically, that will have the TLT going even lower, and that's not good. And we just saw TLT going lower as expected. It's going back below 86, which is not good. And if tomorrow we have some kind of surprise on the rate cut expectation, I think this could go all the way to 83, even break this 84 low. And if that's the case, the market is going to tank. I think market's going to have a big drop on Wednesday if the Fed give a very hawkish interest rate expectation. So I think that's something we definitely need to watch out. And we're seeing SPY is turning red slowly, and this is not a good sign. Basically, a great news, a great EU deal, and you gap up overnight and you just bleed all the way the whole day. And it's not a quick dump, it's like bleeding slowly towards the downside. I think we could potentially retest 620. I think we could even possibly retest 620-ish, this major resistance. And obviously that's a long way. We are still at 635. Um, but when the market dumps, it gets really quick. And we have I saw another number over the weekend that we have a record of a margin loan in June, which is even higher than 2021 record. So that's also something you need to watch out for. And the market sentiment is extremely greedy. And you look at the market sentiment and you look at the TLT and you look at SPY turning red on great news, I don't think that's good for the general market. And we have a lot of major event coming up. Tomorrow we have the wholesale inventory, retail inventory. We have the home price index. We have the JOLTS job opening. We have the JOLTS job quits. We have the CB consumer confidence. And these, even though these are not like major data points, but these could be a leading indicator, especially we have some kind of move tomorrow going into Wednesday. And Wednesday we have some bigger, more important data point like the ADP employment change, GDP growth, GDP price index, the core PCE, and pending home sales, real consumer spending, and we have the Fed interest rate decision at 2 p.m. and 2:30. We have the Fed press conference. And then on Thursday, we have the challenger job cuts. We have the core PCE, the personal income, personal spending, employment costs. Uh, we have a lot of data point and initial jobless claim and continuous jobless claim. And on Friday, we have non-farm payroll, employment rate, government payroll, private payroll, and all that. And we have the Michigan sentiment. Wow. We have so many things on this week. This is pretty crazy. We have the Michigan data. If any of these numbers goes wrong, I don't think it's gonna go well for the market. And we have major tech earnings on Wednesday and Thursday. I think mainly on Wednesday we have these big tech earnings, Meta, Microsoft, Robinhood. Um, we have ARM, and we have Thursday, we have Apple, Amazon, Roblox, MicroStrategy, Coinbase, Reddit. These companies can really move the market, especially Apple, Amazon, Meta, Microsoft. These are the big four over here. So we just have a ton of event this week, especially on Wednesday and Thursday and Friday. Um, and also on Friday is the deadline of the tariff. So we'll see what kind of tariff announcement Trump makes to the rest of the world that has not made deal with US. So that's another big one. It's just I think this might be the most pivotal week of the entire year. So we'll be watching these events very closely. I'll keep you posted of my thoughts of what's gonna happen next. Please like this video and subscribe to my channel. I would really appreciate that. And I'll see you next time. Bye.